Hey, it's Jessica Goose here with RealAgriculture.com. I am at FarmTech 2020, and joining me right now is one of the breakout session speakers, David Mielke, who's a market analyst with Oil World. David, how are you doing today?
Good morning. I'm doing fine.
That's great to hear. It's definitely going to be another busy day here at FarmTech. Is it your first time at the show?
Yes, this one.
Yes?
Yes, not first one in Canada, but
okay,
first
but first time here.
Yes.
What do you think of the show so far, even though we are taping this early in the morning?
I think it's very good. I have to say I was disappointed because I was thinking that you could also buy machinery and see machinery here.
Oh, okay,
but,
okay, not quite. It's a
not
little bit more market and agronomy focused.
So I didn't do my homework, but yeah.
Next time you're here, we'll make sure to get a camera. Well, I'll talk to somebody, don't worry, or to get a camera, to get a piece of machinery here. I'll do that for sure. What we're going to talk about here today, especially with you being a market analyst, is kind of what are we seeing as far as the markets go. So first off, just with the global oilseed market, what are we seeing as far as supply and the health of the demand currently?
Well, how much time do we have?
Well.
Because I was already, I had 45 minutes yesterday, and it was already difficult to discuss that in 45 minutes. But I think just to make 2 points, we have one side of the market, we have a very bearish sentiment in soybeans, which is overhanging the market a little bit. And especially here for Canada and for canola, we have a very bullish scenario on the vegetable oil front, which should promote usage and crushings of high oil-yielding oilseeds, which is canola. So I think this is the key trends that we have seen. Very bearish sentiment in the protein market, which is overhanging the soybean market. Of course, the supply situation in the U.S. is additionally, putting a lid on prices on the CBOT, which is always, influencing Winnipeg and Canadian futures.
Yeah, and what else is kind of happening around there?
Well, if we talk about China, everybody has seen the African swine fever epidemic, which you have to take into account when you discuss the China-US trade war, because without the swine fever, the situation would be totally different.
Yeah.
Because there would not have been enough soybeans in the world to satisfy Chinese demand. But with the swine fever and with the reduction of the pig herd in China, which we don't know how much it is, maybe it's...
Right. The numbers are kind of skewed right now.
Yeah, maybe it's 30%, maybe it's 40%.
Yeah, it was a good chunk. But we're already seeing that those numbers are going to be much higher, especially for the pigs that have already been culled.
Yeah, so China protein demand is down. Crushings have been down, probably 10 million tons last season. And that means that you are also losing 2 million tons of soybean oil, which means you need to import the oil in form of rapeseed oil, canola oil, palm oil. So this is the situation why the African swine fever is bearish for soybeans and proteins, and at the same time bullish vegetable oils.
For vegetable. Okay.
Yeah.
Okay, so not really goodish news there. However, I believe that, and we've been seeing it a lot here, is that canola oil is still making its way to China somehow. It's kind of going to those surrounding markets, right?
Well, there are two parts of that. Because if you look at the Canadian canola situation, it's very heavy export dependent. So you would, roughly speaking, 90% of the canola crop is exported, either in the form of canola, in seed, or in oil. And if you recalculate that in a seed equivalent, you arrive around 90% export dependence. So with China not taking the normal volume of seeds in Canada, they're taking a lot more oil from Canada and also taking indirect canola from Canada via countries like the United Arab Emirates, where imports increased significantly, are also going to be up in January, June 2020, we think, and exporting the products to China. So which is an indirect way of taking Canadian canola. But this is already at the maximum limit because the crush margins are fantastic and they are maximizing capacity in United Arab Emirates at the moment. So moving forward, this is not a growth market for Canadian canola exporters.
It's just good right now, but we're not going to see it flourish a little.
Well, it would be premature to say the growth rate we have seen in July, December, and we are expected to see in January, June, is going to continue because It's like the crushings in Canada. You crush 95% capacity. So yes, the crushers would like to crush more, but they don't have the capacity.
But they don't have the capacity for it. All right. So continuing talks with canola here. What are we seeing as far as Canadian canola carryout? Latest that I've seen is kind of between that 4 and 7 million metric tons. But what's your prediction? Because we're not really seeing a defined number.
We are much lower. We are at 3.3, which is a little bit difficult because 5 to 8% of the cropland has not been harvested last year. So how big is the crop? Yeah, we have a larger number than Stats Canada at the moment, but some people might be even larger. So this is a big part of the stocks discussion, and we are probably more optimistic when it comes to exports in the second half of the season, because we expect China to come back to buy Canadian canola sometime in the next 6 months, because we feel that Chinese demand for vegetable oils should be increasing, and with palm oil prices rallying in the last 3 months, we see a shift back to Canadian canola imports. In what form this may be, I don't know.
Don't know. Is that so? When you talk about those exports, is that just going to be kind of back to the status quo of what we used to be before the whole kind of blockage of Canadian canola products, or do you feel like it is going to be on a bit of an uptick?
I think we have to be realistic on that one. We don't know yet. You talk to Canadian officials, they don't know. You talk to traders, they don't know, or they don't want to tell you.
Yeah.
So it's going to be
to be determined.
Yeah, it's a to be determined, and it's a timing issue as well. Because the problem is if the buying does not start soon enough, and the prices at the exchange in Winnipeg, or the futures of the canola futures, are not recovering from the current level, it's unlikely, I would say, from today's point of view, that we see an increase in the area for canola this season.
Okay.
So it planted in 2020, which means that, if the Chinese want to come back in October and the crop is not as large as it could be, this is something that, has to be considered also in the timing of those trade talks and discussions. But then again, this is what I would say from a analytical point of view. Once you involve governments in politics,
it gets tricky.
Whether it's reasonable or not, I cannot say anything. I don't want to be banned from traveling to certain countries.
Exactly. No, fair enough. Fair enough. What are your thoughts on canola acres for 2020 here in Canada?
Yeah, like I said, last year we have seen a reduction by around. I'm using hectares, not acres. So we.
That's okay. That's why we have Jason. We have Jason in production that'll put that conversion up on the screen for people. No worries.
We're not talking about.
So we can do hectares.
Potatoes and apples. But last year we had a reduction of 800,000 hectares.
Okay.
That's why we also had a second consecutive decline in production of canola. We think that probably unchanged from the current perspective. Some people say maybe marginal decline. It will also depend on what will be harvested in May this year. Like, how is the crop coming off the fields?
Right.
How long is the
Weather
winter?
was a big factor for us last year.
If we see a delay in the sowings because the farmers are still busy harvesting the old crop, this might also cap the canola area, so we might see a little bit of a decrease. But from today's point of view, I would expect something range-bound, stagnating from the level we've seen last year.
Okay, about that $800,000 or 800,000
yeah,
mark.
but that was a decline last year. I don't think we see the same decline again. I think we stay on the.
Or stay on track.
We stay on this. We stay on the area we have seen last year.
That we've seen. Okay.
Yeah.
Switching to soybeans here. U.S. soybean acres are expected to be higher. What's your prediction for the U.S. crop?
Yeah, I think it's going to be higher. Not only the acres, but the acres, yes, most likely, but definitely the production. Last year we have seen a decline again, million tons, not bushels.
Yeah.
24 million ton decline, which should be super bullish in a normal scenario, but with world demand lacking and now record production in South America, which is currently harvested, you have a little bit of a offsetting of this large decline in U.S. production by 24 million last year.
Yep.
We think there's going to be a recovery in 1920 season. World production declined by 21 million tons, but stocks were still 16 million tons higher. So we had record soybean stocks. So overall, the supply was marginally lower.
Yep.
But this offset the decline and the bullish impact of the U.S. production setback. And I think next year normalization of yields and a larger area should see a recovery in the U.S. production.
Okay.
Of course, it's too early.
How does the phase 1 deal with China kind of come to play with this?
Well, it's they have a deal. It's very everybody got very excited.
Right, but we still don't really know the context of the deal.
We have not seen any large
Soybeans go?
sales.
Okay.
We had a 10 million ton quota before, so the impacts are still to be determined, especially now with the virus in China, coronavirus. We also don't know what the impact of that will be. Will that be contained? Will they be able to manage it? It was managed much better than the SRS or the SARS virus 15 years ago, where China first kept it under control and they didn't share the information. Now they shared it with all the agencies in the world. So I think that is an improvement. But last I heard, there was no real knowledge yet or factual-based knowledge on how this virus can be contained. So this is one of the major uncertainties in 2020. How is that impacting vegetable oil demand? How is that maybe also affecting protein demand? That has to be determined. Okay. But you
kind of have to wait and see on that. For my last question here, David, that was kind of going to be one of it was, what do you see as an uncertainty going forward for the veg oil market?
Yeah, the veg oil market, if you look at the development in the last 20 years or last 10 years, palm oil production was just the major driver. You have increases 2 to 5 million tons every year additional production. So this is the main driver. And palm oil production is lower than expected, or is likely to be lower than expected. We don't know. But at the same time, consumption of palm oil, especially in the producing countries like Indonesia, is skyrocketing. So you had 10-year lows in palm oil prices last year, which boosted production, especially in biofuel, everywhere in the world for palm oil. So you have on the one hand this increase in demand, and on the other hand you have the slowdown of production. So this is going to be
get it somewhere else.
Yeah, this is going to be an interesting one. We think we're going to have a deficit of vegetable oils developing in 2020, mainly due to the palm oil factor. And if you look at the volumes, yes, we have more sunseed and we crush more sunseed, so we have more sun oil. Rapeseed oil is flat, basically. So we have some more sun, some more soil, potential to have some more soybean oil production. But again, soybeans, you crush for meal, only 19% oil. So if you don't have the protein demand, it's going to be very difficult to solve a vegetable oil shortage by crushing soybeans.
And to reach that number that you're going to need.
So I think palm oil is the main one. And we expect an increase in prices, even from the current level. Last 2 days, we had a significant drop in vegetable oil prices worldwide, which we think is sentiment-driven. You have the virus in China. You had Chinese New Year and the virus in China. You have the conflict between India and Malaysia. But this is more short-term, sentiment-driven as we see it, and long-term, there should be a supportive or constructive market for vegetable oils, which in turn should also support prices of Canadian canola.
Okay, well, hopefully that'll happen. You heard it here. Well, thank you so much for your time, David. I really appreciate it, as always.